Hello, welcome back to another video on the Asset Insider channel where you come for all your latest news on cryptocurrency. I have a couple important articles to bring to you today, so we're just going to jump right into it. And as always, please like and subscribe if you like the content I am bringing you. Starting off with the first article, the Supreme Court of India has reportedly granted 4 weeks to Indian authorities to come up with cryptocurrency regulation policies. If the Indian government does not provide crypto regulatory framework in 4 weeks, the Supreme Court is set to release their own judgment, the article states. So, the Indian government has until March 25th to release their regulations for cryptocurrencies, or the Supreme Court will do it for them. It further states, the court has given one last opportunity to the Union of India to develop crypto regulation, stressing that afterwards the court will stop hearing crypto-related cases, including the parties who demand to reverse crypto circular released by the Reserve Bank of India. Released in early 2018 in April, the RBI's circular policy prohibits banks from providing services to any person or business that deals with cryptocurrencies. The circular, critically addressed by the High Court in Delhi, which claimed that RBI's decision to end dealings in with crypto businesses violates the Constitution, while the Supreme Court apparently continued to support the RBI ban even after hearing a number of petitions. While RBI has been negative to cryptocurrency adoption, the central bank confirmed its plans to consider creating its own Indian rupee-backed central bank digital currency in August of 2018, but then paused their plans in January of 2019. Meanwhile, an Indian governmental committee has recently released a report raising concerns about the impact of cryptocurrencies on the local fiat currency in the case of crypto being adopted for payments. On the other hand, another governmental committee's report suggested that cryptocurrencies should be legalized in the country, stressing that there is a general consensus that cryptocurrency cannot be dismissed as completely illegal. So, I think this is good for the cryptocurrency community. Like I said in previous videos, every day we see more and more countries coming out to either release new policies or set to release deadlines to release new policies. And this is just further adoption that we will continue to see. It's like day after day, week after week, these countries keep coming out and releasing more regulations. I wish that the SEC would get behind that as well and release some official regulations for the US. Continuing onwards to the next article, which is about more regulation coming out. Bahrain's central bank issues new cryptocurrency regulation. The Central Bank of Bahrain has issued a new cryptocurrency regulation. Before December last year, the central bank had issued draft proposals to potentially regulate and license crypto asset services. The new rules reportedly concern licensing, governance, risk management, anti-money laundering and counter-terrorist financing measures, business conduct, conflict of interest avoidance, reporting, and cybersecurity. The regulation also establishes new supervision and enforcement standards. Cryptocurrency exchanges licensed by Bahrain's central bank will now also have to respect guidelines concerning order matching, pre- and post-trading transparency, market manipulation, and market abuse avoidance, as well as conflicts of interest. According to Trade Arabia, the central bank's regulation has also specified that the crypto exchanges will need to have enhanced due diligence while onboarding new clients, as well as specifications involving assurance that safe encrypted custody wallets will always be able to be retrieved. So they're basically wanting assurance that whatever kind of code storage they're using to keep the cryptocurrency safe, will always be able to be retrieved in case of a hack or something like what happened with the Canadian exchange, where the CEO died and all his private keys were also lost with him. As Cointelegraph recently reported, Bahrain Central Bank has previously launched a regulatory sandbox to allow blockchain and crypto companies to work in the country, pending formalized regulations. Also in January, the University of Bahrain announced they will issue diplomas on blockchain using Blockser's open standard in partnership with Learning Machine, a startup providing a system to issue verified official records using blockchain anchored format. And just like the last article, this is more regulation coming out for cryptocurrency. It just shows how much is really happening behind the scenes. You know, as a day-to-day trader or just a day-to-day retail investor, you might look at the market and see a lot of red days and not too many green days, and then after a couple green days it just turns red again, and you really get caught up in just the price at the current time, but you don't really think about how much adoption is really happening behind the scenes and how much regulation is happening, and how once all these regulations are set in stone, the crypto market will be able to blossom into something much bigger than anything you could imagine. Okay, moving on to the next article. I'm going to breeze over this one quickly. Warren Buffett has come out and said more about Bitcoin because, as we know, he always has great stuff to say. Billionaire investor Warren Buffett thinks that blockchain and technology is important, but remains far less bullish on Bitcoin. No surprise there. Speaking to CNBC's Becky Quick, the chairman and CEO of multinational conglomerate Berkshire Hathaway, reiterated his long-held views on Bitcoin, calling the way some people perceive cryptocurrency as a delusion. It's ingenious, and this is his quote, "It's ingenious and blockchain is important, but Bitcoin has no unique value at all," states Warren Buffett. "It does not produce anything. You can stare at it all day and no little Bitcoins will come out or anything like that." So Warren Buffett thinks that just because you can't physically hold Bitcoin or just look at it and little Bitcoins will jump out of the Bitcoin that you do have, that he thinks because of that, it has no value. And to me, that makes no sense, because the money that you make in cryptocurrency has plenty of value, and you wouldn't be able to make that money without Bitcoin or whatever other trading pair you're using. So I just think he has a very outdated way of thinking. But Warren Buffett is a pretty old guy, and he's probably not as tech savvy as he probably should be to be speaking on a topic like this. I'm sure as time has went on, he has learned more about blockchain, but even though he has learned more, his views on Bitcoin has stood the same. Maybe he just feels threatened by the technology, or maybe he's just playing his hand down, hoping that the market continues to drop so that he can accumulate some more himself. Moving on to the next one. Former Goldman Sachs executive joins blockchain-focused hedge fund. I'm just going to breeze over this article as well. It's basically stating that former Goldman Sachs executive Marco Lim has reportedly been appointed as a managing partner at Hong Kong-based blockchain and cryptocurrency-focused hedge fund My Capital. Finance Manates reported, sorry about that, awkward word, on February 25th. Prior to joining My Capital, Lim also served at Deutsche Bank, Credit Suisse, and Forex capital markets, specializing in foreign exchange sales. According to Lim's LinkedIn profile at My Capital, Lim is expected to bring his expertise in sales and marketing to further develop the company. So that's pretty much all I'm going to state from this article. So this just shows that, people are leaving giant hedge funds or giant financial entities like Goldman Sachs to join blockchain related projects. We've seen this happen a lot, where we have people leaving Morgan Stanley, Goldman Sachs, and other large Wall Street companies in order to join other companies like Bakkt and other crypto related hedge funds, or companies like Grayscale. So it's just showing there is a lot of news going around behind the scenes. This cryptocurrency market is growing. There are a lot of smart people who have connections behind the scenes that know what is going on and know what is coming in the future. And that's why they're moving to these blockchain related businesses. Right, moving on to the next one. This is just a speculative article. It says that long-term Bitcoin price indicator turns bearish, suggesting that Bitcoin bottom may be in. A lagging indicator has turned bearish for the first time in 4 years, suggesting that Bitcoin's price may have bottomed out and a new bull run could begin this year. As of press time, Bitcoin's 50-week moving average has dropped below the 100-week moving average, confirming a bearish crossover, the first since April of 2015. Long-term bearish crossovers, however, tend to occur at the end of a big bear move, with prices rallying soon after, as moving averages are based on past data. For instance, the 50-week moving average responds to price action seen over the last 12 months, and the 100-week moving average tracks much older data. Therefore, the bearish cross of these two is a product of a prolonged bear market. BTC has dropped from $20,000 to $3,122 at its lowest in the 12 months ending since December 2018. Put simply, it takes great effort to part the bears and push the 50-week moving average below the 100-week moving average. As a result, the bear market is usually exhausted by the time the crossover is confirmed, which seems to be the case with BTC. The leading cryptocurrency by market capitalization is currently trading at $3,749 as of this article, up more than 19% from the lows near $3,100 seen 11 weeks ago. Further, Bitcoin's historical data shows previous bear market ended with the 50-week moving average falling below the 100-week moving average in April of 2015. So, this is stating, like it said, when the 50-week moving average crosses below the 100-week moving average, it signals that the bear market has been going on for quite a while, and normally the bears are exhausted by this point. It normally shows that when this cross happens, we've pretty much hit a bottom. And with all the stuff that is going to be released in March next month, I believe that the bear market will be ending soon. I don't want to get anybody's hopes up, but I do have my hopes up just a little bit. I believe that we will continue to see market manipulation like we saw today and the day before, where Bitcoin drops from almost 4,200 all the way down to the low 3,700 area. And I believe we'll continue to see that manipulation until these big exchanges open and institutional money is able to come into the market, which will be in March when Bakkt opens up, along with SBI virtual currencies and Fidelity and the NASDAQ. So we'll see how March goes. I have high hopes for March, but I do not want to get anybody's hopes up. So I'm going to just tread lightly here and hope for the best, but expect the worst. Thank you for tuning in for another video. If you like this information, please like and subscribe to my channel. I'll be back in the next one. Have a great day.